Good morning, everyone. This is Mike Minter, Chief Investment Officer with Financial Synergies, and this is your Market in Minutes report. And of course, we are looking back on last week, December 4th through the 8th, and it is Monday morning, December 11th. So let's jump right into it, guys. Okay, let's take a look. So we had again really good performance last week, kind of across the board. Dow was essentially flat, but still across the board. All the major indices up pretty nicely. You can see the Russell 2000 here, just the small capitalization stocks. We've been talking a lot about them because it's that asset class you really want to see come into the fold in terms of participating in this rally, because it indicates wider breadth in the market than just your mega cap stocks. And that's really what you need to have a kind of a sustained rally and bull market. You really need more than just your massive mega cap stocks. So you can have a rally on that, don't get me wrong, but it's nice to see this, which indicates kind of overall stronger participation in the rally. So that's great to see. So really good returns last week, and then that continued obviously to push year-to-date performance higher, which is great to see. Across the board, everything doing really well. And again, it's nice to see these small cap stocks coming to life, after such a long drought, frankly. So really nice to see. And in the last month, just November in general was just stellar. All of our positions were up. Really screamed higher November. If you opened your November statement, yet you might have seen a nice little bump in account values, which is great to see. Everything's doing pretty well. So let's take a look at some rates. Again, I'm including kind of some relevant rates over here on the right. We'll talk more about this, but the continuing story is yields coming down, and you're seeing that here. Nothing crazy dramatic last week, but you have seen these continue to come down, and that's part of the reason for the stock market rally. So nice to see that kind of continue, and I think that's probably an anticipation of, right or wrong, and anticipating that the Fed is going to begin at some point, maybe in 2024, ratcheting down those rates. So let's talk about it. So let's kind of see what the story was last week. So stocks obviously extended their gains. So the relationship between the bond and stock markets, which pushed stocks higher in November, i.e., falling bond yields and rising stock prices, it kind of disappeared last week for a bit, with stocks falling in the first 3 days of the week, despite these yields continuing to come down. So the yields dropped following a weak job openings report, the ADP employment update that we've talked about, and a substantial productivity revision. But on Thursday, investor enthusiasm returned on this kind of enthusiasm for AI, basically artificial intelligence. And so we had a chip manufacturer announce a new AI chip, followed by a mega cap tech company unveiling an enhanced version of its AI model. So that's for business use. So some good news there. Just overall kind of enthusiasm in the market kind of bumped it up. So, and then stocks continued to climb on Friday as investors viewed a stronger than expected employment report as increasing the potential for a soft landing, which is what we've been talking a lot about. The idea that we could get through this without some hard economic landing or recession. So, and it's looking more and more likely. Nothing is a sure thing, but it's looking more likely that the Fed might actually achieve that, which is good news. So let's take a look at the other side of that story, which is this productivity surge. So, higher productivity may be the most effective and preferred way to reduce inflation. So last week's revised third quarter productivity report saw an upward revision of the annualized productivity growth from the initial report of 4.7 to 5.2%. And this was obviously a welcome news on the inflation front, and an encouraging development for the future of corporate profits. Obviously, as productivity increases, there are ways to find more efficient ways to produce goods and services, and so that obviously is able to kind of keep costs in check, so to speak. So overall, just productivity increases are good for the economy and also effective at keeping inflation down or at least somewhat in check. So that's all good news. So the 5.2% jump in productivity represented the fastest pace since the third quarter of 2020. So it's been a number of years. The report also showed unit labor costs falling. Again, a good sign. This was at a 1.2% annualized pace, reflecting a cooling of wage growth inflationary pressures, which again we've talked about. We needed some wage inflation because it had been tamped down for so long, but it had gotten a little ahead of its skis, so to speak, and so it's good to see this cooling off of wage growth to a degree. And productivity has increased for 2 straight quarters, potentially allowing the Fed to ease its restrictive monetary policy. All this is ultimately leading towards the possibility of decreasing rates sooner rather than later. So all good news. So what's on deck? Key economic data. So we got Tuesday Consumer Price Index. We've got, so that's the CPI report. Wednesday we have Producer Price Index, PPI, the other major indicator of inflation. But we also have this FOMC announcement here that I've circled. So that's a big one because they're going to announce, obviously, I think it's either Wednesday or Thursday, which they actually announce whether they're going to keep rates steady or increase. So the wide consensus expectation right now is that they don't do anything. They keep rates right where they are. It would be a pretty big shocker if anything other than that came out of that meeting. I don't anticipate it, but we are going to keep a close eye on that. And the market's going to kind of be trading around those anticipations until that announcement. So Thursday, retail sales, jobless claims. Friday, industrial production, purchasing managers index, and composite flash. So companies reporting earnings. Not a huge week. Wednesday, we have Adobe. Thursday, Costco, and Friday, Lennar Corporation. That's the home builder. So that kind of rounds out what's on deck for the week. So I really appreciate y'all's time, guys. As always, we will report back to you next week on what occurs this week, and hopefully more good news for you. So hopefully we continue this nice little rally into the end of the year. Hopefully Santa comes to see us. We shall see. But so far, pretty strong rally into the final month of 2023. So here's all our contact information, guys. If you would like to get in touch with us, this is a great way to do it. If you'd like to subscribe to our YouTube channel, you get all the videos as they come out. So yeah, hit us up there or email us or give us a phone call. We'd love to talk to you. Okay, guys, I'll leave it at that. Here is some fun disclosure for you, and we'll talk to you soon. Thanks, guys.